Hello, good weekend to all. I'm bringing a video of the Euro USD for Monday's trading and seeing where we are, how far we'll go, so on and so forth. Okay, so it's Mr. Intermarket Analysis covering the currencies today. Okay, so Euro, this is a tricky one, folks. This is a very tricky one. Okay, so I'll try and elaborate, see exactly where we are fundamentally. Positioned and technically positioned, and obviously from intermarket analysis perspective as well. Okay, so Euro USD. Let's have a look at the Euro camp first, and then we'll look at the US dollar camp. Okay, the Euro camp suffering from deflation, as we all know. Concerns about the periphery, given the fact that Germany is doing pretty well, has a surplus. So again, that's going to cause some rifts. Okay. We have concerns in Italy with the serial rapist Mr. Berlusconi, the absolute imbecile, who's obviously doesn't want to take no for an answer, won't sit back, keeps interfering, just like that Russian, what's his name again, Mr. Putin. Yes, once you have power, it's very, very hard to let go. So obviously he's going to he'll keep interfering in Italian politics, and that'll create uncertainty and so on and so forth, and cause a lot of problems there. So that's going to cause problems in the Eurozone. Then we have the next door neighbour, Mr. Holland. Okay, that chap, his approval ratings dropped. Obviously, he has been downgraded. I think his bald head's been downgraded as well, and his IQ and his intelligence. Basically, he's not doing well. Okay, the argument of pro-austerity and pro-growth seems to be losing its shine now, given the fact that he came in. And it was obviously challenging and arguing in both sides, or from his perspective anyway, he wanted to go pro-growth, and obviously it hasn't worked given the fact that you had a downgrade. Obviously the Italians were threatened with the downgrade, and it won't be long till Portugal as well, because it's just a matter of time. Okay, so basically the euro's under pressure. That's basically the summary. Okay, they're talking negative rates now. Okay, we had one day sell-off in the Eurozone, and all of a sudden some chap came out and started talking negative rates. Okay, and obviously now they're talking QE. Okay, so that's not going well for the euro. Okay, so that's basically the fundamental backdrop: weak growth, deflation, and obviously all that deflation has been exported out of Japan, given the fact that it's been doing immense amounts of QE, or killing the Amazon rainforest, as I like to call it, destroying the trees and printing more money. Okay, and basically it's exported all that deflation into the Eurozone, given the fact that the UK inflation rate is doing pretty well. Okay, and the growth in the UK is obviously doing well, so they were wise to stay away from the Eurozone, and they realised there are a lot of concerns and troubles there. Okay, so it'll just be a matter of time before the spark ignites in the Eurozone and we have a real problem on our hands. Okay, now the only reason why the euro is remaining afloat and is remaining strong is because the Chinese are backing it, pumping money into it. Okay, obviously the only reason why they came in and bailed out the Europeans was the fact that they were going to do QE down the road and asset prices would inflate, and the Chinese would make double and triple back on the money. Okay, so even an idiot can see that from far away. So these games that are played on the international level against folks, I mean, people call me a cynic, but I'm being a realist and explaining economics as it is. We don't fight wars anymore by a physical nature, unless you can pulverize the opposition with drone strikes. It's war by proxy now via economics. That's the new war, folks. It's no wonder why China's going into Africa and buying every single resource there is. Okay, and obviously the Yanks are going into the Middle East and carpet bombing the hell out of that, so they can buy up all the oil they can get out their hands on. Okay, so it's war by proxy via economics. That's the modern warfare. Okay, once you understand that, you'll understand the stock market. If you understand the stock market, day trading will be very, very easy for you. Okay, because in reality there's a lot of games that are being played. Once you understand the games, once you understand the game that's being played, the problem is with a lot of people who day trade is they think they're playing chess, but they're playing checkers. Okay, and that's why they get constantly annihilated, and 95% of traders fail. Learn to play chess, folks. Once you learn to play chess, then you'll be batting at 90% plus. Okay, like I do on the live analysis service week in, week out. Last week 417 points. The week before I had 200 odd points. I got caught out with the ECB rate decision. still ended up with plus 110. So on average, I do exceed around 1,000 points a month on average. Okay, given the fact that we have some decent weeks, etc. Right now, I'm short the euro. That's why I'm doing this video. I'm just putting forward my thesis and the argument, and that's what trading is all about. I may be right, I may be wrong. Who cares? I'll move on to my next trade, but I'll bet at 90%. Okay, that's what matters in the long run. Okay, so with regards to the euro, that's the euro camp. Now let's look at the USD. What are the arguments for the US dollar to increase? Okay, let me just bring up a chart the USD, and you'll realize why I'm parroting the strength in the dollar. Okay, number one. Okay, as you can see from the US dollar, you have an inverted head and shoulders formation. We're retesting the neckline. We filled the gap around the 80, just around 81.8 level, and we've got an inverted head and shoulders target of around 83, which surprise, surprise, is more or less around the gap fill region, which is a tapering gap, I like to call it. Okay, given the fact that we haven't tapered in December and Mr. Yellen did try and pour cold water over it, okay, I think it's inevitable, and it will happen in the new year. Now, markets tend to forecast 6 months in advance. Efficient market hypothesis, I keep repeating. So QE1, QE2, QE3 is all factored in now, folks, and it's about time we short covered on the dollar. Okay, so we did have some reports over the weekend, which is quite interesting, that the Saudis and the Israelis are now planning and plotting together and scheming together that they want to attack the Iranians in advance. So again, that could be a geopolitical crisis that could reignite, strengthen the dollar, obviously reignite commodities such as oil and gold, which is negative for the markets because it's a fair trade. Okay, and that could cause the stock markets to eventually carve out a top. Okay, and obviously the oil prices start to rally again, and then obviously that then would create inflationary fears, okay, down the road. So again, so on and so forth. Okay, so it's a long story. You do need to have a knowledge of economics to understand the games that are played to a certain degree. Okay, so on this occasion here, US dollar, obviously you can see technically is solid, looks good as if it wants to hit the 81, 83, 84, even 85. So certainly bullish, and adding some geopolitics in there, obviously any sort of socio-economic concerns as well, given the fact that we've got the debt ceiling coming back again. Again, we don't know what's happening there. Obviously, you could have some Eurozone concerns. Again, we don't know what's happening there, given the fact that Italy and France were on the verge of down. Well, France definitely got downgraded. Italy was threatened with downgrade. Any more unexpected downgrades, and you have some real concerns. Just imagine Germany, okay, under the cosh. So again, there's a lot of factors here, folks, okay, for the US dollar to go higher. Okay, so given the fact that equity markets are very frothy right now at the top, it only takes a little small spark. We had weak earnings from Cisco last week. We had weak earnings from Walmart, both forecasting emerging markets slowing down. Again, it takes one spark, and you'll have money will run towards safety, and the US dollar, as we all know, is the safest place to be. Okay, so bear that in mind, folks. Okay, so again, economic data as well, strong economic data. Any further pieces of information that strengthen the US dollar or strengthen the US economy again will increase expectations of tapering again, will cause the US dollar to inflate. So focus on that. But I think one of the main reasons why the US dollar, given the fact that the US dollar basket is heavily weighted towards the euro, is QE. Okay, QE in Europe will cause the euro to get hammered, thereby shifting the short trade in the euro USD, and so shall we say a long trade in the euro USD, creating a long squeeze and causing money to flow into the US dollar. Okay, so that's why I expect there's several reasons, and that's primarily the one of them. Okay, now let's go and look at the smaller time frames. Now let's go back to the euro. Actually, let's quickly look at the weekly, or should I say daily. Daily, I've already showed you there. You have a HNS formation, and what we're trying to do now is we're just retesting the neckline. Okay, that's what we're doing right now. Even if this neckline isn't obeyed and is disrespected, we still have a massive bearish engulfing candle on the weekly chart that you can't ignore. Okay, and we are trading within that candle. We've broken the bullish channel, so therefore we are going to expect it to move southwards, and we're looking for a move further down. Okay, so keep an eye on that, folks. Okay, and again, this is a 60. It's not 60. It's a 38% retracement from the pivot high to the pivot low. Again, we have a lower high. We've broken out the bullish channel again, like I've explained. We did close a gap below here, so that obviously I did create a temporary support level. But on this occasion here, this rally, this sell-off here was due to deflation concerns and QE and negative rates. This rally here was due to expectations or euphoria over Miss Yellen and her QE choir singing act. Okay, what else can I say? Call it. Okay, mini me version of Benanke, by the way. That's what she is, but a female version. How she's mutated into a female, I've still yet to work out. Okay, so keep an eye on this, folks. Okay, so this move down on the daily chart, that's what I expect to happen. If you go to a 4-hour chart, okay, 4-hour chart here, obviously you had an H&S formation. We've recaptured the neckline. That's why we're probably more than likely having a bit of a short squeeze here right now. Okay, but again, if you use your charts, as you know, there's a lot of resistance in this region here. If we go up to that level, again, very unlikely, very hard from my perspective. Okay, so let's go look at the 60-minute chart. Again, 60-minute chart, you do have an argument here for a potential IHS formation, but from my perspective, I'd say this formation will more than likely fail. Why will it fail? Mainly primarily due to the reasons I've explained. Any talk of deflationary concerns, any talk of weakness in the Eurozone will cause us to fall. So 1.35 should definitely be a solid resistance level. They may even short squeeze it higher above the 1.3151. It's 1.35 and then slam it back down again. Okay, so keep an eye on that, folks. 10-minute chart. Let's have a look quickly at 10-minute chart. 10-minute chart. Obviously, we've tried to test this 1.35 level. Failed once. We did try to recapture it again. Expecting another failure. So definitely horizontal resistance there at present. Okay, so definitely a zone to watch out for. We have already had a topping tail already around the 1.3505, so they've already knocked out a few shorts there before they reversed it powerfully down 30 pips. So definitely 1.35 level, solid resistance on the 10-minute, 60-minute, and even if this inverted head and shoulders would try and play out, I expect a failure and emotive sell-off on the way down. So keep an eye out for that. Okay, so daily chart, again, that's probably the main chart that we're focusing on, retesting the neckline of the H&S. Although you can argue this this pattern here is not exactly spectacular. The right shoulder isn't spectacular. Okay, I agree to a certain extent. Technical analysis is a subjective science, so you can project what you think or what you expect. But the most important thing is that we've broken the channel. We're retesting the channel. Okay, so previous support equals resistance on that base on that channel, and you're at the Fibonacci retracement of 38%. So keep an eye out for that. Okay, again, you've got a trend line, previous support equals resistance as well. So there's a lot of arguments here that the euro will certainly find a lot of pressure or come under a lot of pressure. Okay, folks. So I'll conclude with that. Okay, the euro under pressure. I remain a bear on the euro and looking to retest the 1.33 level, if not the 200 MA on the downside. Okay, risk on, risk off, wax on, wax off.